And WTI crude pulling back slightly today after staging a rally over the past 2 months, but gas prices back on the rise, inching toward $4 a gallon, levels not seen since June of last year. So what can we expect as we head into the end of the year? CNBC contributor Helima Croft joins us now. She's the head of global commodity strategy at RBC Capital Markets. Helima, it's always great to have you here.
Thank you for having me.
I think it was the last time you were on was in June.
Yes.
And that's when the Saudis announced cuts. And it's all about the Saudis.
It was that million barrel a day unilateral production cut. They announced it at the June OPEC meeting. There was some skepticism. People were saying they're going alone. They couldn't get the whole band together. And we said the fact that they're going alone, the Saudis backboards with barrels. And it just showed their resolve to stabilize this market. I think the Saudi action, combined with we have seen a Russian pullback. Remember in June when everyone was so worried about the oil market, they kept saying there's this armada of Russian oil on the market. Russian barrels are down 800,000 since January. We're starting to see Russian production pulling back. And there's still some macro worries about China, but the imports have held up. We haven't seen a drop off. And June was a monster month for Chinese buying. July softer, but August looks pretty good so far.
On the national security front,
yes,
how important is it for us to replenish the SPR? And crude seemingly getting away from us now. I mean, it was right there in the crosshairs a couple months ago.
I mean, the Biden administration came out this summer and said, we're in buyback mode for the SPR. You know what they did? They just paused it. And again, I think this goes to the toolkit for the Biden administration. They're not going to do blockbuster SPR releases. They've paused buybacks, but they're having to rely on energy diplomacy. And what did we get last week? We got this informal Iran deal. They're not going to call it a deal because they'd have to take it to Congress. But the Biden administration, they did the hostage deal. They're going to get their $6 billion. But also it's going to be go soft on sanctions. They basically want those Iranian barrels on the market. So it's going to be about getting whatever barrel you can on the market. They're making trips to Saudi Arabia, trying to get the Saudis to put more barrels on the market. They're having to fall back on energy diplomacy.
Helima, so you just mentioned China, and a lot of the economic reason, they're not great, the readings over there. Okay, so if they have a deflationary spiral going on right now after the move that we've seen in crude, and again, you just highlighted the fact of the Saudi cut, doesn't it set up for a tough move from here? We just got back to those highs from the spring or so. If you're looking at WTI in around here, like, is this something you want to buy for a breakout here, or are you more focused on the weakness in China?
I mean, I think you have to have a wait and see approach to China. It reminds me a little bit of 2015. Remember that China credit scare, and everyone was like, oh my God, sell it? By the end of the year, Chinese imports had held up. And right now you have this macro wall of worry on China, but the Chinese oil import data looks solid. Now, some skeptics are saying it's going into inventory, but you look at refinery utilization, it looks pretty good right now. And so from the oil market perspective, it looks pretty solid. But again, you cannot overlook the risks on the macro side. But everything is pointing to, on the supply side, Saudi resolve, and China's holding in there on demand.
So if China, if all the numbers out of China on the oil front look pretty decent at this point, even though the economic data is coming in soft, if there is some sort of bailout, we're seeing the biggest property developer, go under practically, and there could be some sort of stimulus coming.
Signs of strength in the broader Chinese economy. If you want to say, like, what's the dynamic when we talk about getting beyond this sort of 80, 90 Brent range, I think you'd want to see strength in China, more optimism about the China story, because the supply side, the Saudis are saying, we'll do whatever is necessary.
So to Dan's point, are we sort of in this range at this point?
I think we're in this range now. And I mean, we're in August. People are not at the office, thinly traded market right now. We want to go into fall and say, what does a macro picture look like? Are we going to see, if we continue to see signs of strength in Chinese buying, I think that will then be something that people are saying, well, look, there's a macro concern, but the Chinese data looks strong.
Most people can't say where a barrel of oil is, nor should they be able to. They know where gasoline is, though.
Yes.
And gas has gone up significantly over the last couple of months.
And there are issues beyond crude. There are issues on refinery capacity. And again, this is a conundrum for the Biden administration. You've done the SPR. You did these blockbuster releases. So what do you do? What's in your toolkit? You can appeal for more U.S. production. U.S. production has been really strong. Remember, people said we'd never see 13 million barrels, capital discipline. U.S. production's been strong this year. But again, what else do they have in their toolkit? So that's why look for things like that Iran deal. Look for potential deals more on Venezuela. Look for the traditional call to Riyadh saying, help me out.
Are they going to pick up the phone?
Well, look we have this broader reset conversation. I mean, Saudi hosted this big Ukraine peace forum. You had Jake Sullivan there. Saudi-Israel normalization talks. The Saudis are looking for help on defense, civilian nuclear. There's a potential deal to be done, but it won't be just about oil.